Hello guys, I welcome you all to today's video. In this video we will be looking at spikes trading in boom and crash. Okay, spikes trading in boom and crash. It's going to be a complete training session for those of you that have been looking for how you can trade spikes successfully. Then you need to watch this training session from the beginning to the end, okay, so that you will understand how to go about it. Okay, so all these are very important. But before we go fully into it, in case you are joining us for the first time, I welcome you all to Qora Digital Cash. This is a platform which I used to share with you my ideas on how you can make some cool cash for yourself online, most especially within the forex niche. All you need to do is just to take some time to browse through the channel, watch my training videos, and of course make sure you understand the strategies shared there, and practice and perfect your trading skill first on your demo account before trying them out on your real account. And if you love my videos, kindly give me thumbs up and share with families and friends. And if you are yet to subscribe to this channel, kindly do so right away so that you can be notified whenever I upload a training video like this. So quickly, let's go straight into what we have right here. Like I said, we will be looking at spikes trading in boom and crash. Okay, so let's check out what spike is all about and how we can address it, how we can identify where how it's going to happen and things like that. These are some of the things we will be checking out in this video, and of course we will quickly have a look at a few things which we should put into consideration before we go fully into it. Okay, so let's quickly do this. Okay guys, this is Jamboard, so I'm just going to use this to explain a few things right here. Spikes trading happens in two ways. Okay, we have it's usually happen on boom and crash. Okay, it usually happen when trading boom, and it also happens when trading crash. Okay, and of course spikes are those things that happen suddenly when the trading activities is going on. Okay, you just see it pumping up or crashing down suddenly when the trading activities is going on, and most of the time it claims more candles than what you have created right from the normal trend. Okay, so that is how it happens. Okay, this is how it happens. Let's say you are trading boom. Okay, let's say you are trading boom. You know, boom candles are mostly downward candles, and it goes down gradually, and all of a sudden you just see the spike popping up like that. Okay, it just goes up like that, and sometimes it claims more candles than expected. The same thing is applicable to crash. Okay, crash is always an upward movement. It keeps on going up until you see a sharp movement that takes down most of your profit, or even puts you in negative, and sometimes it wipes off your account. Okay, all these are very important, but there are some things you need to take note of in order for you to know this. Okay, there are trends whereby we have more spikes happening, more of these spikes happening, and there are trends whereby we don't even have it happening. For instance, let me quickly say this. Okay, if you are trading boom, you have more spikes happening when the market is on uptrend. Okay, when the market is on uptrend. And if you are trading crash, you have more spikes happening when the market is on downtrend. Okay, that is very important. I'm not saying there won't be spike when the market is on downtrend for boom or uptrend for crash. There will, but those are just little pullbacks that happens. Okay, but in most cases you have it happen around this trending period, that is when the market is on uptrend for boom and when the market is on downtrend for crash. Okay, you have more of it happening around then. Okay, then another thing you need to take note of is that for boom, okay, spikes usually happen from the support zone. Okay, from the support zone, or from crash it usually happen from the resistance zone. Okay, so you need to take note of all these. Okay, so once you know all these, then you will know when to go into the market and when to exit the market. Okay, if you want to avoid spikes for boom, then definitely you shouldn't trade when the market is on uptrend, and you should stay away from the support zones. Okay, then for crash, if you want to avoid spikes, then you shouldn't trade when the market is on downtrend, then you should stay away from the resistance zones. So all these are very, very important. While in the other way around, if you want to trade the spikes alone, okay, the best time to trade the spike is to combine these two together in boom, and also combine these two together in crash. That is, you trade when the market is on uptrend, then I'll consider all the support zone for boom. Then for crash, you trade when the market is on downtrend, then you consider all the resistance zone for crash. Okay, most especially the major ones. Okay, so all these are very, very important. When you have these at the back of your mind, then it will give you an opportunity to have a successful trading journey, whichever one you are trading. Either you are avoiding it or you're trying to trade the spike itself. Okay, so that is it. So now let's go a bit practical to see how this works, and so that we can take advantage of the market right from there. Okay guys, like I have said earlier on, I said for crash, this is crash, you can see the market is on uptrend around here, and you can see that it kept on buying and buying, and it was buying with little crashes happening. Okay, little crashes happening. Okay, those crashes that are happening right here are just minor ones, so it is more risky if you are trying to trade the spiky part around here. Some resistance zones will not be respected around there, because the forces behind it is that of the buy forces, and of course it is stronger than the sell forces. Okay, so that means that we cannot really rely on spike trading around here. Okay, it is the best time to trade in normal trend. Okay, it is the best time to trade in normal trend, because even if there is a pullback, okay, it will definitely put you back in profits. You just need to hold on to it and make sure it takes you back to profit. Okay, then this knowledge which I'm passing out in today's training is something that you should know, so that you will be able to trade the market successfully. For instance, okay, actually I've been saying this in most of my videos, just that some of you have not really gotten it very well. That is why I always lay so much emphasis on trend trading. Okay, but most of you will not even understand. Some of you will still be asking me how do I handle spikes, how do I handle a spiky situation. Okay, this is very easy. Okay, if you are in the right trend, then you can easily undo it. If you are in the right trend and you use a reasonable lot size that your capital can control, then definitely you can undo it. Okay, except if you are in the wrong trend, that is when you may not be able to undo a spiky situation. For instance, okay, let's say you decided to come in around here. Let me bring down the this horizontal line. You came in around here, and after getting to this region, it's crashed down, or probably, okay, that will not put me in loss. Let me you already know that this is an uptrend situation. You came in around here, you got to this region, it crashed down, it puts you in loss. If you had used a reasonable lot size, you don't need to close it. Okay, because you know that the market is just pulling back at this point, then definitely it will go back up to put you in profit. So by the time it goes up, then it will definitely put you in profit. So that is the assurance you get from you knowing the right trend to trade the assets you want to trade. Okay, so what am I trying to say? You can say that when the market is on uptrend for crash, we hardly have what was it called, spikes happening, the crash down candles happening around here. Okay, so now let's check out the other way around. Okay, this is the other way around. Okay, this is when the market is on downtrend. Okay, you can see it's on downtrend. We had so many crash down candles happening around there. You can see it kept on crashing. Check out from here, from this region to this region, it kept on crashing down. This is 5-minute time frame, guys. It kept on crashing down and crashing down and crashing down. Okay, because it is within the right trend. Okay, it is within the right trend. The same thing is applicable right here. You can see it kept on crashing down. This is because it is within the right trend. Check out this too. Okay, check out this. You can see right from here to here, even though it's trying to go back on buy trend, but the forces is not strong enough. And check it out, this is still crashing down. Okay, so you can see that we hardly have the bullish candles happening around there. Just the bearish candles are what we are seeing right here. So right from here, so you can see that this is because the market is within its trend. Okay, and it kept on crashing down at this point, and all the resistance zones are being respected. Okay, if you should check it out, it crashed around here too. Check out this. Okay, if you should check this out, you can see it crashed here, it crashed here, and it has crashed here again, and it kept on crashing and crashing and crashing. So when you understand this, then you will be able to milk the market successfully with this. Okay, so you know when to trade the spike and you know when not to trade the spike. Okay, you can see this also around there. You can see it crash around here, and it's also crash around here. So history will always repeat itself. Okay, you just need to study the chart and see how the chart is being formed before to analyze the current situation of what is most likely to happen at that point. Okay, so all these are very, very important. So when you understand how the trend works, then you will be able to milk the market successfully. So guys, this is just an intro into what we will be doing in this week. Okay, and of course you already know that for you to trade the spike, you need to know the exact trend that you can trade it for each of the assets. Then you also need to know if it is going to be from the support zone or the resistance zone. All these are very, very important. Once you know all this, then you will be able to milk the market successfully. So you can go back to your chart and try to identify the downtrend period and focus on the resistance zone to trade the spiky part. Right from there for crash, that is for crash. But for boom, focus more on the uptrend period, and also try to identify the support zone in order for you to trade the spikes. Okay, so guys, I will be stopping right here. Remember, this is coming to you courtesy Qora Digital Cash, and if you have any question at all, feel free to contact me. My contact details are in the description box below this video, and if you are yet to subscribe to this channel, kindly do so right away so that you can be notified whenever I upload a training video like this. Watch out for my next video. Until then, God bless you.